Hello everyone, my name is Salim and welcome to the Markets Breakdown Analysis for Tuesday, the 24th of October 2023. We'll be breaking down chart and show the exact zones who are priced to close for potential buys or close below for potential sells as well. So looking at the daily candle for Monday, so the daily somewhat looking weak bullish, but technically this is a bearish candle, and the reason for that is because we've had a market gap open on the during the Asian session on Sunday. Because the daily candle on Friday closed around 1981.500 and then the weekly opened around 1965.400. Almost the full gap has been fully corrected. And we've mentioned how we could see a potential resistance to be formed on a daily, within this weekly candle. And the way we did break it down, obviously, and I'm just going to demonstrate this again, the daily candle on Friday closed small bullish. So now when we measure this daily candle, the body of the candle, that's roughly around 45 pip range. But then when you measure the top wick, this is 155 pip range top wick. So this becomes a rejection on a high time frame, because when you drop down to the 4-hour time frame, you can clearly see price ranging on the 4-hour time frame. We've had a candle breaking above this range, but then the following candle failed to continue bullish, retraced, formed a resistance, and now price is consolidating. Now, obviously, the anticipation didn't just come based on this daily closing with a rejection wick to the upside, but also came the fact that the price is tapping almost to the 2000, which is a strong key level, and we have a monthly resistance around 1987-700. We have the monthly candle coming to a close within 7 to 8 days, and then when we look on the weekly, we have two weekly candles closing extremely bullish, breaking above multiple weekly resistances on the left. So the retracement is needed, and I would say it would be good to see a retracement, maybe to retest this previous weekly resistance before the continuation to the upside. But now what we're going to do is we're going to look at the daily, and the daily more likely will be closing weak bullish, still ranging on the 4-hour time frame. And now to break down the chart and drop it down to the 4-hour time frame, and what we can see here is we have this range here. Let's have a look. Okay, we have a 4-hour resistance formed around 1979-400, and then dropping down to the hourly time frame. We have an hourly support around 1965-800. We need to adjust this level of resistance around 1981-400 because this is a range. And then we need to adjust it again to 1982-600. We have an hourly support around 1971-900. Looking at the 15-minute time frame, this becomes a really messy range. So more likely the no trade zone is going to be really large, simply because of how price action is forming on those time frames, like the hourly and the 5-minute time frame. Now, based on the hourly, maybe we could look for sells below 1971-900, actually 1971. And ideally is to wait for price to break and close out of this range during high volume time. Now, the only problem is when you look at the 5-minute time frame, this is a really messy range. So I would say ideally is to wait for price to break and close below this hourly support, because this is not only a good confirmation on the hourly and for price to break out of this range, which is also the 4-hour range, but also for the weekly candle to break its own low to push bearish. Now, to look for potential buys, and I would say potential buys could be above 1982-600, above at 1981-400. Above this hourly resistance. Potential sells. Now we could have the target here. We're going to have 3 targets for sells on this time. So I'd say potential sells could be below 1971. And as mentioned, we need to wait for price to break and close below this level during high volume time. And this is going to be the no trade zone. And now to look for potential buys. Now going back to the daily, actually the monthly. So we have a monthly resistance around 1986-800. Drop it down to the weekly time frame. The weekly, we have this weekly wick. Drop it down to the daily. On the daily time frame, looking on the left, let's have a look. Nothing to really identify, so we need to work within this wick here that was formed recently. So dropping down to the 4-hour time frame and looking on the most recent price action, we have a 4-hour resistance around 1991 800. Dropping down to the hourly time frame. Again, we have a same level of resistance. We're looking for a time frame, a same level of actually, let's have a look on the 50-minute time frame. So looking on the 50-minute time frame, and now we have a 15-minute resistance around 1986 100. So now we have two things matching here. We have a monthly resistance around 1986 900, and we have a 15-minute resistance around this area. So I'd say the first target for buys could potentially be 1986 900, targeting the monthly resistance formed on that was formed in May 2023. And the second target for buys, now we have this 4-hour resistance formed on Friday around 1991 500. So we would have the second target for buys at 1991 500. And now to look for potential sells. So we've mentioned how we could look for potential sells below this area, and as mentioned, we need to wait for price to break and close out of this range during high volume time. So the first target we have is pretty much easy to set up. So we have this 1-hour support at 1965 800. Ideally, to wait for price to break below 1965 800. So the second target for sells, now going back to the daily. So looking at the weekly actually. The weekly, we have a weekly previous resistance around 1961 700. Zooming in, dropping down to the daily time frame. Let's have a look on the 4-hour time frame. We have this 4-hour rejection formed previously. So say within the recent price action, we have a clean traffic on the left, I'd say. And then looking on the 50-minute time frame, I would say the second target for sells could potentially be 1960, targeting this previous 15-minute resistance. And the other target we can have here is, since we have this clean traffic on the weekly, maybe we could see a further retracement for price to retest this previous weekly resistance around 1942. Just to adjust it based on the daily, we could have it around 1944 500.
Dominion Markets, your trading sanctuary.